All right, good morning, good afternoon, good evening. It's about 2 minutes to the top of the hour. It is May the 6th. Let's see what we can do. I still have a few trades open from last Friday. Most of what we worked on has closed right here. This is what we did as a group. This is what we did as a group. That's all closed. The stuff that I was doing on my own, that's about to close. So that's a real quick recap. Let's get the show on the road for today. So, daily chart and calendar. Where's the calendar? So when we look at the calendar for today, Monday, there's very, very little for us to worry about. We should likely be done by 9:30. And tomorrow, in the course of the night, so for you guys in Europe, you'll have some activity, right? So it should be pretty busy for you folks overseas. And then by the time I come back to work tomorrow morning, it's still a pretty light day. Okay, so there is volatility, but not for the reasons we would normally expect. All right, so let's go take a peek at the daily chart. When we look at today compared to yesterday, I clearly see an inside bar, and from probabilities point of view, we can see the mother bar is green. We should assume the mother bar bias, and so I would expect more bullishness. Let's go take a look at this on an hourly scale. And so on an hourly scale, this is where we were last time we were together. Let's find our ceiling. Let's find our floor on an hourly chart. And so clearly we have, a defined risk, right? We have our ceiling, we have our floor. If we look inside of this on a 5-minute chart, there we go. On a 5-minute chart, we have a floor below us, we have a ceiling above us, and already we can start building a ladder. All right, and let's take a look over here. Really, really simple stuff. You're using your mind's eye just to connect the dots. Something like that. Maybe I'll raise this one up a little. And I'll put one, maybe two in the middle, right here, and just one. And then we can adjust this at will. All right, so this is our 5-minute point of view. And we already know, because of the daily chart and our assumption, that we are trying to go up. And so let's find an excuse to buy red candles. Right? So if you were just to walk to your computer at this moment, you would take the boxes, you would put a box on a most recent swing, maybe at the bottom here. And with that bias in mind, you want to be buying support somewhere around here maybe. Right? And you're willing to buy again and again and again, right? You have the money to spend, and you're willing to spend 4 boxes worth, right, to eventually find that move that you're looking for. That's why my stop loss is here and my first trade is there. My target is right there, right? And the people that say, well, why is the target so tiny? Well, it's because it's achievable, it's repeatable, and it's consistent. And if you don't believe me, well, just for the record, let's go take a look what consistency looks like. right? This is when I was trading 0.03, and then we earned the right to grow. And so eventually the size grew from 0.03 to 0.05, and the return also grew. And I've been trading 0.05 ever since. And the entire record is just, oh, there's a couple losses here. The entire record is basically a 45-degree equity curve. And that's, that's what we're trying to achieve, right? Consistent results over and over and over and over and over and over. Right? So by not touching the target, by not touching the stop loss, by not touching the size, I build consistency on the output. And then I control that through my behavior. And the box helps control the behavior. Right? So I'm in this for the consistency. Over time, it yields to the money that I'm hoping to make. All right, just go take a quick peek here. Just looking at it in numbers terms. All right, so altogether in this account, $1,500, about 4,000 pips, 4,200 pips. If we just check, let's say current month, no, or last month, previous month. $1,200, 3,400 pips. And so things are moving nicely. Oh, we're about to make a little bit of money here. All right, so for those of you trading along in the group, buy red candles in this box here. Oops. This box here. Yep. Okay, so we want to be buying on red candles. Very, very little on the calendar, so the squawk box should be pretty quiet. Let's go take a peek at our dollar index, and we'll understand why the euro is so bullish. So this is what we were dealing with last week. Let's zoom into this. And so last week we were working with the assumption that we had a flag, and eventually the flag failed, and the halfway pattern or the flag ended up failing, and we ended up back into the channel. And now what was a break is now a false break, and maybe the real break is at the bottom, right? So if the real break is at the bottom, maybe this turned out to be a double top and not necessarily a flag or a pennant, right? So if this is a double top, then we were in a range. As such, in order to create this double top, we had to be ranging. And if that's the range, then this is where we broke the range. And so let's measure this, right? If we measure this right there, and oops, and we take this, our destination is in this area here, 104.30, 104.25, 104.35. Right, so we have a destination for the dollar index, which gives us a destination in a roundabout way, in the neighborhood for the euro. Okay, so the only way to have a double top, to be able to call this a double top, is to break the bottom of the range, and that broke, right? And so that is officially a double top. We can call it a double top, and then we can find its ultimate outcome. Probability speaking, there's a high probability that we go here. It's not a certainty, it just puts the odds in our favor, right? There's support here. Okay, so let's keep that level here in mind. Let's draw a little line there. 440, and then we'll go from here. Red candle, if you're trading the euro, you want to be buying, oh, you would have been buying 1 bar ago. I'll buy here. So now I have 3 open trades in this box. I still have trades from last week that I'm working with. All right, so as a group, this is where we are operating. If we're wrong, we'll find out. In due time. We have a 6-month bill and 3-month bill at 9:30. That's about it. All right, red candle. I have a 4th click to take, so I'll take it right now. I'm buying this level here. And so now I have 4 open trades in the current box. All right, I'm willing to spend all the way down, 36 pips worth. Okay, so combined with last Friday's trades, this is my break even. My break even. Yours is probably different. And it's only 16 pips away. There we are. All right. Red candle. If you have a click to spare, that would be a good time. All right, so ideally would be looking to go maybe a couple boxes, maybe 3 boxes past the top. All right, that would be kind of nice. If we can find our way towards the 8:30 mark. We had that lined up. We had that in our line of sight last week. We want to be sellers up there. How far are we? Oh, we're only 5 boxes away. Pretty good idea. We have not, the reason why we want to be selling up there, if you recall, go to the higher time frame. Put a Fibonacci on this. I got the 61% retracement at the 8:30, 8:35 area, and that's kind of where we want to be. Right? We want to be selling this. And so we're buying our way up there. By the time the euro gets there, it would be conceivable that the dollar index is at its support. Right? We're kind of playing that correlation. Right? Dollar index is about 58% made up of euros. And so it's a good gauge. You know, it's worth taking a look. And then when we have intervention from, Bank of Japan, it too has a pull and a push on the dollar index. It's about 13% or so. All right, let's see if we can close some winners here. Get the show on the road. All right, that's one. Let's do a couple more. Sorry, I'm just adjusting my speakers. Red candle. Recycle. Anybody that played in the European session, you had a pretty, docile 8 hours. Everything was sideways. No big crazy moves. No, the average day so far, 36 on 62. We have a lot of room for growth here. Right? We're just trying to figure out how will it happen? Where can we take part? Right? I'll take part right there. If you can afford to take a trade, there's an opportunity coming up. Sorry, I'm just looking at my other trading platform for a second. What's going on here? Nothing. Okay. Wow, it's like everything's just come to dead stall.
So we're looking now to the fear and greed index, 41 out of 100, which indicates fear, while the crypto fear and greed index is 71 out of 100, indicating greed. Keeping an eye on the VIX as well, which is up 2.3% at 13.8.
So he's talking about. We have our target up there. It's only a few boxes away. Doesn't take long to move that much. Even gold is looking bullish, and there's opportunities everywhere with this weakening dollar. There we go. Come on. What a waste. Almost feels like we're disconnected. Holy. The bars have shrunken. Everything's just crawling now. Doesn't make for very entertaining trading. Oh. Slow, 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 slow. Even the Squawk Box has nothing to
According to
say.
the information, Microsoft readies new in-house AI model.
Yeah, it's a holiday in the UK. It's also a holiday in Japan. It was Children's Day in Japan today. No, we don't trade the Bank of England. Neither do we trade the Bank of Japan. Bottom of the hour. boring move should come to a stall here. Those of you that haven't had a chance to see it, ATN Desire to Trade released another episode, another recording of myself and him talking for about an hour or so. We reviewed the strategy and made some winning trades along the way. It's on his channel if you want to see it. There we are. All right, so if you guys bought down here 5 minutes ago, making a little bit of money. Pips. So that should be about 3, 2. Tomorrow night, Tuesday night, I'll be doing a futures trading, 9:30 Eastern time, PM, 9:30 PM. Ooh, that's interesting. On my YouTube channel, things are actually progressing quite nicely. We're uploading all the videos, or I'm caught up to the uploads of the videos, and so things there. There's a record of the system, the strategy. You can see it in action. You can see every day there's something new, something different, something we may have never seen before. And so over time, the channel's picked up about 720 subscribers. It's not bad. I started with nothing. And so once I get to 1,000 or so subscribers, I'll start doing probably live YouTube sessions. Make it worth everybody's while. Once in a while, not all the time on YouTube. It's too much. What if we're wrong on here? Right? What if this thing just decides to turn around and put a couple boxes to the bottom? Now, where will we look to? Looking to my left, I've got this right here I'm concerned with. So that's our floor. That's 46 pips away, 5 boxes away. Ooh, 4 boxes away. All right, so let's be cautious. This is a hedge trade to protect the stuff that I have up on top. it's not triggered, right? It's just pending. I'm still bullish. I remain bullish. And so just in case we come out over here somewhere, right, I want to catch the break of the box with this box. And I'm hoping it leads me into the right direction. There we go. This is the this right there where it says 93.6. That's a function of this tool here, which is called info panel. And then within the settings, I can see the unrealized P&L, which is $94. It saves me a ton of real estate, right? Instead of having to look at this down here, I can just look at that and I have that much more chart instead of a toolbox at the bottom. Sideways for a whole hour, and the range was 6 pips. All right. Trying to trade a trend is, it works, but it's also not what I don't have the capacity to sit here and wait for that breakout. And every time I tried, the breakout was either false or did not lead to where I thought it would. And so it ended up, shattering my expectations. This fulfills my expectations over and over and over and over and over. And by not changing my expectations, by not changing the 3-pip target, so, I don't have runners, I don't have swing trades, I don't have anything in here other than 3 pips, 3 pips. I get to engineer where this is. All right, and that's important to me. I'm waiting to see if we make the low or lower low. How did we come out of the box? So we could see it this way, or maybe we could see it this way. Let's see where we go next. Is it going there, or is it going here? Right? The statistics tell us it should come here. No catalysts. The Fed speakers aren't scheduled for another hour, 20 minutes. Hmm. Yeah. And then this evening, for you guys in Europe, you'll have a fun time. You have a whole bunch of news coming through, all Euro related. I'm just looking at the calendar for overnight and tomorrow. Don't worry, folks. Volatility is incoming. And also, for those of you that haven't heard, instantfunding.io, the group that I featured a few weeks back, they are now offering C Trader, the same platform here. Right, so if we just so you know who I'm talking about, these guys here, they're now
Goldman Sachs CEO Solomon says inflation continues to be a little bit sticky.
they're
Speaking on CNBC.
they're now offering C Trader as a trading
It says
option.
there is a possibility of a rate cut or two this year.
Right, so that will simplify things for those of you that maybe want to trade a little bit more money or try your skills with a little bit more money. I'm buying this right here. Right, we're at the low. We're at the low here. I'm just thinking, what if I move my box right there? Like, I'm still in the same box. Right, so I'm thinking something like that. Oops, I changed it. Let's find this one instead. There we go. Right, depending on where you start, it changes your perception. Right? Depending on where you start this, it changes your expectations, I guess, for the next box. Right? It could go down here. That's a possibility. Right? But it could also do something like that. Just in your mind, come up with an alternative to your bias, right? So you have an idea in mind, but you have to come up with, like, what if, right? So what if it doesn't work? Now, by thinking ahead, you may never use the alternative plan B, C, and D, but at least it's there and it's ready, and you have the money set aside to execute that plan if you must, right? So the goal is to have alternative on hand. And you're not squeezed, you're not threatened, you're not pressured. You can actually think clearly and just execute what you already thought of because you thought of it an hour ago. Right? If we're wrong, the plan B, plan C, plan D, it's all there to average with plan A and try to get me out of this. Right? So if I go into box 2 and box 3 and box 4, it's all because my box 1 or our box 1 right here, right now, is in trouble. Right? Boxes 2, 3, and 4 are to fix box 1. Ba-da-ba-bum, bum, bum. Still going sideways. Right, inside bar on the daily chart. Right, we can't forget this. Even though we're sitting here staring at this 5-minute ladder, there's a reason why, our bias has the probability of success built in, right? We're not betting the low probability, right? We are betting on a high probability. And so when we see stuff like this, oh, on sale, and that's an even cheaper sale, and cheaper sale, and cheaper sale, eventually it's not on sale anymore. It's a giveaway. You probably don't want anything to do with that. Slow and steady. All right. So if you have 4 clicks in box number 1, you're limited. You can't really do much more until you recycle some of those trades. If you're in box number 2, it opens you up to 4 more clicks. So now you have the average of 8. Right? So on and so forth, all the way to a maximum of 16 clicks or so. Right? You control this, you have the discretion. You're learning to use discretion, right? That's the idea. I'm giving you a model that gives you a ton of freedom. You have to learn how to use all that freedom. No, don't shoot yourself in the foot with it. The box kind of allows for mistakes and repairs. And so you don't have to reinvent the wheel. You just have to figure out which way it turns and help it in that direction. It's okay to close a series of trades in a row and keep 1 or 2 open, right? You don't have to close everything at once. You can continue to try and solve the problem as you are removing risk. Right? There's nothing wrong with closing a trade. Doesn't matter if it's a good one or a bad one, right? You're taking risk off. There's nothing wrong with that. We're tempted to put more risk, right? We're drawn to click, 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 click. We're drawn to just over trade. This is why it's important to remember there is nothing wrong, with not putting all your ammunition to work. It saves some just in case. And more often than not, we end up using the backup. And then you'll find out, say, hey, now I need a backup for the backup. And that's how you end up in box 3. If you have a backup for the backup for the backup, you end up in box 4. And then eventually you have to quit because you run out of money. We don't know what comes next. We're just making an assumption. Right? Maybe this goes over here. Maybe this goes over there. Maybe this goes over here. Or, what if we go here somewhere? That's the best part, you know, this unknown, if you can operate in this unknown, if you can make money from this uncertainty, you're trading probabilities. Everybody else is kind of operating out of fear, right? They must have all the check boxes, they must have everything all lined up with confirmation to remove the fear of loss. And then they accuse us of, you know, picking up dimes and nickels in front of a steamroller. It sounds to me like they're afraid of the steamroller. We have a plan to see the steamroller coming and to, you know, not step in front of it. Different mindset. There's nothing wrong with, you know, trading the way you see fit as long as it makes you money.
According to a high-ranking Egyptian source cited by Sky News Arabia, a high-ranking Egyptian source again says that Hamas delegation is expected to arrive in Cairo tomorrow to complete ceasefire negotiations.
There we go. 1, 2, 3. Red candle. Buy. Let's double check the size of my box. 9 pips. 60 bars or so. 59. Good enough. And make sure my other boxes are the same size. Yep. It's happened to me before when I've traded or was trading with the wrong size box. Still successful, but it's annoying to find out that you were slightly off all day. It's like wearing the wrong shoes. Something feels weird. Behavior is the same. It's just the box, you know, you're traveling through it faster or slower. You're not getting the same results. You're getting fewer trades or you're getting more trades. Something is not normal, right? All of what we're doing here is targeting, you know, normalcy. We just want to be in a familiar environment. By showing up on schedule, you kind of structure that environment. Right? Bottom of the hour is well past now, right? So this move here from 8 until 8:30, we're about 7 minutes too late. We're 8 minutes past. Right? So this is when this right here, 8 minutes ago, right around there, is when I would have expected this. Instead, we got that. I got a portion of what I wanted. All right, that's perfectly fine. All right, so let's take a look. Take a look at the most recent swing. So if we go from swing low to swing high, as we speak, the market has pulled to 38 and it looks like it's trying to go to 50. Right? If we look at our ladder, that's kind of what we have already figured out, you know, with our mind's eye. Right? So
Russian Foreign Ministry notes that a Russian nuclear drill should be considered in the context of hostile statements by NATO countries, according to officials.
And so we see the capacity for the market to find its way here, right? It has the ability to do this, but we can also find a reason for it to fail. So that might be support, that might be resistance, you know, look to your left and then trade the facts, right? The facts that we trade come on our 1 minute charts. And that's kind of where we see, okay, we've done an average move, we are at support, there's a probability that there's a bounce. You know, you're trading probabilities and you're usually early, right? We are ahead of the move. We don't trade a confirmation. By the time that confirmation presents itself, we've lost, you know, one of the 3 pips you're trying to make. Right? So we trade before the move, and then if we make a mistake, we try it again and try it again, try it again. Eventually, we know when we're wrong overall. Until then, I keep trying. Right? So assume this is a low. What if you put the box on that low? What's the potential? The potential is here. Right? Assume this is a high. The potential is we can still find our way down here. Right? We're just trading assumptions. Get ready for whatever comes next. That's the best part, you know, we don't really care. We'll deal with it. You know, it's not like I must have a certain happening, you know, happenstance. I'm content with whatever the market decides to do.
Russia's foreign ministry says that Russia reserves a right for the tit-for-tat response wherever US short and medium-range missiles appear.
Correlation matrix. US index. Where's the euro? There it is. 0.82.
And Russia's foreign ministry says that Russia also consider F-16s in Ukraine as carriers of nuclear weapons.
God damn. I just took a buy at the bottom of the box here, like the 1 measured move, 1 9 pip over the course of 1 hour, right? And if that doesn't work, maybe it's here, right? There's no certainty here, right? So get that out of your mind, right? The idea that it must do this, nope. It must not do anything. It will do whatever. And so prepare for whatever. Right? It's just a measuring cup. It tells us this is a normal move. The result of a normal move is usually a normal outcome. You know, something like this, maybe up to here. It's a lot of maybes. We trade maybes. And then once in a while, it's, you know, Whiskey Tango Foxtrot. The waiting is driving me mad. Top of the hour, we're looking for the London fix. And so, like I was saying earlier, if I get a couple more hundred subscribers to the channel, maybe I'll be able to do these in a live YouTube instead of, or concurrently with this Zoom session. The Zoom session
Russia's
is
Foreign Minister
in
Jean
real
Francois
time.
President Macron's statement on possible deployment of French troops in Ukraine says this can be considered as readiness for direct confrontation with Russia. But worth noting that France have spoken out this morning on these reports, saying that these are not true.
A lot of BS going on over there. So, as I was saying, yeah, so the ability would be to, share the skill set maybe a little bit better. It's, that's the idea. Thing with YouTube is there's a bit of a delay, right? So if I click on my mouse, by the time the folks on YouTube, the trade's already closed. By the time they get to see it, like stuff like this, there's minutes, if not seconds, of delay. Right, one full box. I'll put this on there. It'd be kind of sweet to see it go up there. Red candle, if you can afford it. London fix coming up. Best part of waking up is with winners in your cup. Man, you gotta love it. Gots to love it. Let's take a peek. History. And this is the beginning. Let's go to the bottom. This is today. 0506, 0505, 0505, 0506 is right there. So this is from today. I think we did all right. Picking up dimes and nickels in front of a steamroller. Is it going to break down and give us 4 more clicks? I think we're approaching the 61%. Or are we still at 50? I can't remember now. Oh, we're approaching 61. Right, we are willing participants here. While everyone around us is looking at the red candles and they're tempted to sell because, oh, it lines up with all these lower highs and lower lows and it aligns beautifully. What they're neglecting to see is that it's also finding support. And once it finds the support that it's looking for, or that it's testing for, it will move away from there. So I'm buying this. I'm buying the illusion. It's a sleight of hand. We're buying 61%. If you look at it here on the Fibonacci scale. All right, we're buying 61. And we have the willingness, the ability, and the funds to take it all the way down to 76, maybe even a little deeper, depending on where and when you started. Right? Remember, we're playing against a weakening dollar. Right? So it's like turning a ship in the ocean. Right? We're playing a weakening US dollar. And right now it's kind of bullish. It's a green candle. It's not going to the moon. Right? So the euro is not going to the South Pole. All right, there we are. All right, did we find it? If you've got buddies that are into trading and stuff, send them to the YouTube channel. And there's a lot of catching up there. They can pretty well learn the whole strategy just from watching, reruns. We don't want to complicate things. you do want to close the feedback loop if you can. That's what I'm here for. Just learn to lose. Holy. Building a position, remember, we're postponing gratification. And that's exactly how the market will get under our skin. Right? If we lose, sight of what our plan is, why we're doing this, why are we buying? And so if you give up on your initial bias, if you get tricked into thinking that something is falling apart without the clues, without the facts, it's just the market pulling a fast one, right? It's pulling the wool over your eyes. And so if you measure things, already we can see we've done 2 boxes from the high, right? It's trying to do a little bit more. If it does 3 boxes, ultimately I know where I'm wrong, but I'm kind of prepared for this, right? The psychology of being wrong is the same as being right, right? It's just another step in the process. It's something we need to address. There's nothing wrong with being wrong. Right? The mistake is staying wrong and not doing anything about it. And that's where this strategy shines. Right? It allows us to lower the risk, spread that risk, try to do so evenly, and then you get to engineer an exit that's in your control, under your terms. All right, so I got up this morning, my usual 5:30, 6 o'clock, came to my computer, trades closed. I traded before our live session, right here, it's 7:30. And then with our live session, we built a position here. Right, so our group time together, the group time together started here. We built trades along this leg down, and all of us in the group are lined up to get paid on this next leg up. All right, so I have about 20 more minutes with you, and then I have to let you go, but nonetheless, this will be the plan. We started here in a pullback. Right? We built a position in the pullback, and now we expect to get paid for the work that we did. And if that unfolds according to plan, that's kind of a facsimile of what I look forward to doing every day. This would be a real good example of what we try to do every single day. Show up on schedule, build a position, get paid, and be done on time, right? Preferably before 2 hours are up. And so I start here, I build a position, I get paid, and I get out. We'll see if that works. That's what we did as a group. And the reason why I show up on time every day is because this environment that I walk into every day is either near the top of the day, which it was, or I walk in near the bottom of the day. So today I walked in near the top, played a pullback, and now we're waiting to get paid to see if this was a pullback or an actual reversal. Right? I put my money on the pullback. If it was a reversal, we'll be going into box 3, box 4, box 5, boxes. We'll be adding boxes to the bottom of the daily candle. Remember our original assumption? The original assumption was that we were missing 2 boxes to this, and we were going to add them to the top. And our plan B, C, D, E, and so on was what if we add the 2 boxes to the bottom, right? So we've already assumed one is more likely than the other. We're at 61%, and we built a position here. We used this time together to build a position long on a down leg. And now we're waiting to get paid somewhere around 8:30 right there. Oops, 8:30 right there. All right, so that's kind of what we're looking for. Anything can happen. Anything will happen. But we kind of have a guideline as to what we would like to see. And then we are ready for que sera, sera. Right? Whatever will be, will be. This is important. This here, these 2 vertical lines, the beginning and the end serve a purpose, right? Because if I can't get in and out between these lines, I end up doing stuff like this, right? Overstaying my welcome, taking undue risk. For me, this is forward testing my strategy, right? I test it while I'm teaching it. For you guys, learning to trade this method, you're best to operate with a 2-hour window, all right? Don't forward test it, or don't go beyond your business hours, right? Operate like a bank, right? Banks don't work overtime. Right? So if you can take a trade here, we're at support, right? We're testing this resistance. What was resistance is support. Right? I just took one. I'll take this off. I'll take this off. Put this there. Maybe change that color. Make it yellow. Make this one yellow. There we go. All right, so that's really the goal, right? The goal is to try envision what the daily candle is trying to do, right? I'm thinking the daily candle is trying to add boxes to its existing top, right? I'm thinking 36 pips out of 60 is not enough. We're going to be doing more. And I'm willing to put my money on the upside. All right, so I built a position, and now I'm waiting to see if I was right. Hedging will come into play if I'm wrong, 4 boxes from my original trade. All right, so in theory, what we have is a float, and you get to choose how much of a float you're willing to carry. How much open trades, how much money in open trades are you willing to carry? a swing trader is usually focused on 5, 6 open trades, you know, each one maybe 1 or 2%. And we're trying to not spend more money or less. We're just trying to be as even as possible. Right? So it's the probabilities that we exploit. Right? So if I show up on schedule, I expect to spend 2 to 3 boxes worth of money. I would expect in return to make 2 to 3 boxes worth of money. Right? So becomes an average day in, day out, day in, day out. How that average unfolds is never the same, right? Sometimes I'm buying, sometimes I'm selling, but overall, it's an average over time, right? The law of large number. I'm just here to provide a sample. And so you have to remember, I still have trades from last Friday here. Right? So that average that you see is today plus last Friday. What we did together today is bullish. What we did as a group last Friday closed profitably. What I did prior to the group session last Friday is what I'm working on right now. It's a non-issue. Just in time for the bounce. Right around here. That's the level we highlighted earlier. Sorry, my window is open. Yeah, that's more like it. We'll adjust this one here to these two. Put this one in there. I should take that away. All right, we're trying to get to there. 24 hours or so. 24 hours. Can we do 55 pips in the next 24 hours? No? Will we be shorting from up there tomorrow? I'm just looking, thinking into the future, one move at a time, right? One move on a much higher time frame. We're just trying to see if this is even possible, right? And that defines the risk. If we start trading right here, right now, the risk is clearly defined. We know where we're wrong. We also know the potential, right? So a lot of guys, they get hyper focused on the potential and they forget where the risk is, and then they put too much money on the trade and it blows up in their face just to end up being right in the end. That's the worst kind of feeling, right? When you mismanage the sizing, even though you had the direction right. That's what we're trying to avoid here, right? We're spreading that risk in the course of 36 pips, right? It's an environment that we're willing to operate within. Right? Willing to operate within. It's not we're not operating out of fear. All right. We're just trying to see, is this a low? If this is a low, if this is a bottom, put that box right there and start measuring your way back up. All right. If it's not the low, if it's not the bottom, put the box back where it came from and envision where the bottom may be. All right. According to our unit of measure, the market has the potential to go to this level here. All right, 772, which would be support. All right, what's the bottom of the box? Right there. And the inside swing. All right. Unlimited potential, both good and bad. We're just trying to pick one side and then manage the opposite side. Okay, so out of a $12,500 account, I'm floating $160. We don't notice the amount of time we're here for. And then, strangely enough, in that course of time, in that 2 hour window, the size of the bars is usually getting smaller and smaller and smaller. And so what was, volatile an hour ago is now creeping. And our brain has not caught up to that fact just yet. And we're still thinking this is just as exciting as it was an hour ago. Right? And so it's this likelihood of doing the wrong thing is increasing as time goes on, right? The more time you spend here, the more likely you're going to trip over your own shoelaces. The market is designed to do this to you, right? It's not the same market, bar after bar after bar. And the bars are very different now as opposed to an hour ago. The average bars right now are less than 1 pip. And then an hour ago, our average bars were, beyond 1 pip. We're trying to show up and trade the market's blood pressure, right? When the market has elevated blood pressure, that's when we want to trade. When the market has, depleted its blood pressure, like right now, low blood pressure, there's really not much here. We have to sit here and wait. It's all cool. It's okay. Just don't lose track of your plan, right? Don't give up on a good plan. I'm assuming this is a low. I'm putting my box right there. And I'm trying to, calculate or count into the future. What do I need to get out of all of this, right? And in my situation, I need 2 boxes from right here to get out. And anything beyond 2 boxes makes me money, right? This is break even. So I'm not trying to go to the South Pole, nor am I trying to go to the moon. Right? Ultimately, I'd love to get back to that white line, and I need to avoid going here. All right, so I engineer what this white line is, because I choose to spend money, right? I can move this up or down. All right, so I'm gonna leave it at that. I have to go and follow along with my regimen, and if you're on my calendar, I'll see you in a few minutes. If not, I'll see you tomorrow morning for this trading session. Alrighty, enjoy yourselves. Talk soon.